Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Kickstart video where I take a look at three of the major currency pairs for this day, July 10th, 2024. In this video, I take a look at the Euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. Talk a little bit about the fundamentals as well, so let's get started. The economic calendar is again light today, although we do have Fed Chair Powell speaking once again. This time he will trek to Capitol Hill to speak in front of the House Financial Services Committee. Yesterday, the chairman danced around commenting on the course of policy action, although he did reiterate that the next move in rates is likely to be a cut. He characterized the risk as two-way, not just skewed toward inflation. He commented that on a couple occasions that the labor market has cooled considerably. And that's a backdrop that we go into this meeting as well. As far as the looking at some of the major currency pairs, we'll start off by taking a look at the euro versus US dollar. And in trading, this is the 4-hour chart for this currency pair, by the way. And in trading yesterday, the price moved down to test the high of this swing area right through here. I had outlined this area for a while in the euro versus US dollar, going all the way back to this period in February. You can see the number of different swing lows and swing highs that came within that. Yes, we traded above it, and yes, we traded below it, but when the market returned to these levels, you can see there's just a pattern of either bouncing off of it or going through it and going the other way, things like that cause it to be a swing area, including last week where the price based against this level before moving up into the weekend. And on Monday, we came back down to that low or the high of this swing area. By the way, it comes between 1.0787 and 1.08036. And we found support buyers moved higher, and trading yesterday we came back down to the high of that swing area. And again, found support buyers have moved higher. We're currently trading at 108.248, which is just above the 61.8% retracement of this move to the downside. So the buyers remain more in control above this swing area here. And those dip buyers that we saw yesterday against this level have been rewarded, at least marginally, for their efforts. It's only 20 pips or so higher from this level right here, but it's better than nothing, isn't it? So take a look at the hourly chart on this currency pair. If we look at it, and we see that the 100-hour moving average has been, violated on the downside and violated on the upside in trading here today. So the market is saying it's unsure of which way it wants to go here, but the buyers, again, are trying to make a play above the 61.8% retracement and now above the 100-hour moving average as well. We'll see if this short-term level can hold support and give us some clues for further upside momentum in the euro versus US dollar. Let's take a look at the dollar versus yen next, and looking at the 4-hour chart, spreading it out here. What is key off from a technical perspective? You see this high going back to the end of April. That was the swing high before intervention, sent the price tumbling to the downside. Since then, we've seen fairly steady move to the upside, especially over the last few weeks of trading. But the low prices through here all came down to that old high price right here, found support buyers against that level and pushed to the upside. Let's get that out of the way. You can see it more clearly. I'll put a horizontal line, a red horizontal line right here, and you can see how the support came and held. And that's good news for the buyers. So the buyers are in control in the dollar versus yen. Let's take a look at the hourly chart. And if we look at that, the 100 and 200-hour moving average was also a key barometer for in the short term as you try to look for those clues where the market is overbought. And you can see that the price last week came below that moving average level and then found resistance sellers against it here and here. In trading earlier this week on Monday, the price sort of moved up closer to that level, getting above the 200-hour moving average in the process, then rotated to the downside. And in trading yesterday, we tried to hold resistance against both the 100 and 200, but then traded above and below it and finally closed the day higher. In trading here today, you can see the narrow trading range, but we remain above both the 200 and the 100-hour moving average. That keeps the buyers more in control as long as the price can remain above those lows at 161.01 and 161.17. The upside target would continue to remain to be the high price for the year. The high price going back to 1987. That level comes in at 161.93. So be aware of that. But certainly the buyers are in control in the dollar versus yen. Finally, take a look at the sterling versus US dollar. We take a look at this off the 4-hour chart. We have a trend line cutting across where recent highs, and the high price on Monday came up toward that level, found willing sellers. A swing area down here between 127.54 and 127.77 did hold support on the dip yesterday, and we are seeing a rebound to the upside. We're kind of made a mess of that, but you can see the support holding against the high of that swing area right through here and rotating back to the upside. We do have this swing area through here. I have outlined this level wasn't at the extreme through here, but we reestablished a resistance against this level right here, forming that this swing area. We came up to it 5 or 6 weeks ago through here and found willing sellers. We moved above it here. It should have sent the price higher. It did, but then quickly rotated back to the downside. And in trading this week, we also breached above this swing area here, but then reestablished resistance right here against it. So I'm going to keep that level as a level that we need to get above and stay above. Comes between 128.16 and 128.27. As the price can get above those levels, the bias increases to the upside for this currency pair. Let's take a look at the hourly chart for giggles. And like the euro versus US dollar, we're making a mess of the 100-hour moving average with a move below it and a move above it all through here. But we are more recently in trading here today, extending away from that 100-hour moving average, which now becomes close support at 127.93. As long as we can stay above that level and work toward this swing area up here and get above that level, the buyers are firmly in control. So be aware, be prepared. Finally, I'm going to do a little look at the New Zealand versus US dollar. Why? Because the Reserve Bank of New Zealand did keep rates unchanged, but it was thought to be a more dovish, unchanged policy as opposed to a more hawkish one at the last meeting. And what the price action did was take the New Zealand versus US dollar down to test the 100-day moving average at 0.60669. Yes, we moved a little bit below that level, but found support buyers. And we're also down here is the 200-day moving average, which is at 0.6075. Currently trading at 7.8, just above that 200-day moving average and certainly above the 100-day moving average. So this area, the 100 and 200-day moving average, are key for the New Zealand versus US dollar. Also corresponds with swing area through here. We did move below those levels here and here over the last 2 weeks, as you can see, but then reestablished support against the 100-day moving average here before moving to the upside, testing this swing area up here. So coming back down to the 100-day moving average, lower the swing area, 200-day moving average, all a cluster of support that if it holds, maybe we get a bounce. If it breaks, we go lower. So that's my look at the 3 major currency pairs with a bonus look at the New Zealand versus US dollar. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.